Thank you for tuning into this earnings conversation with Blue Star. I have with me Mr. Vir Advani, the company's managing director, to decode the June quarter results. Mr. Advani, it's always a pleasure having you on the show. Let's quickly, do a recap of the Q1 numbers. So our revenues rose 13% at 2,200 crore. Net profit was up 12% to about 83 crore. EBITDA was up 18% at about 145 crore, and margins came in at 6.5% versus 6.2% a year ago. So, Mr. Advani, you have always, spoken about expanding your gross margins. Even the last time we spoke, you had mentioned that the company is undertaking cost optimization, and you were expecting to improve margins by about 0.5% for the entire fiscal. Are you still sticking to the guidance? And how did the cost inflation scenario look like, for the company during the first quarter?
Yeah, so thanks so much for having me. Actually, we're quite happy with the margin expansion we've seen in Q1, especially because it was such a poor summer. It was a washout of a summer. You saw that our segment 2 volumes barely grew, only about 5 or 6%, much lower than what we had expected. But it's very heartening to see that in spite of that low volume, we were able to deliver reasonably good operating profit. We're confident that as volume comes back, as the market recovers in the second half of the year, volumes come back on, you'll see a very healthy margin position. We've been working extensively on margin improvement across the value chain, in R&D, in supply chain, in manufacturing, in sourcing a lot of our production. So all of those benefits are beginning to bear fruit, and we're very confident that the full year margins will be better than Q1.
All right. So coming to the demand, you did mention about some kind of, slowdown. But at the beginning of the summer, the industry was pegging a growth of about 20. And then later they had, got the focus down to about 8 to 10%. So what is the outlook for the upcoming months? And how has been the actual demand in July?
So, July is not a good month to look at as a trend because it's monsoons in most parts of the country. It was unfortunate that we've had a washout of a summer. It happens every few years. You can't avoid it. Not just the air conditioning industry. I think many industries in India are impacted. But, we are less worried about a loss of a summer. We're more interested in the trend and in the direction that the industry is taking. You know that just like Blue Star, there are other manufacturers that are making significant investments. We're all looking to grow the market. The consumer is very keen to buy air conditioners. So we're fairly confident that the long-term view of this industry remains intact. One lost summer does not mean that the outlook changes for us. So as far as Blue Star is concerned, we're continuing with all our investments, both in capex as well as in operating expenses. And we're looking forward to a strong H2. I don't think July, August are going to make much of a difference. I think it'll be the festival season onward. And of course, looking forward to a strong Q4. I think directionally, we're looking at double-digit growth for the industry over the next several years.
Double-digit volume and value growth?
Yes, I think so. So, as far as Blue Star is concerned, definitely both will be double-digit. I think the industry, there has been a lot of pricing pressure. So I know volumes have been doing better than value, but I think some of that will stabilize as more production comes on stream, as we all see throughput. I think that whenever you have a bad season, pricing always goes out of whack, and that has happened. But I'm fairly confident that pricing will also return to some normalcy. But more importantly, like us, all manufacturers will be looking to bring down costs, because one of the key levers to growing the market is, of course, to bring down the price points, right? Because we are a value-conscious market. This is a value-conscious category. So we're all working hard, looking at technology, looking at innovation as means to bring down the cost of our products.
Right. Mr. Advani, could you tell us what would be the range of price cuts that we can see maybe in the next few quarters?
So a little unsure. I think everyone's just getting their head around, the first half of the year, which hasn't been so good. I think we'll begin to see some price movement in the next couple of months. we're not expecting any substantial change. In fact, after a poor volume summer, pricing should hopefully stay intact. I think what's happening on the cost side is that raw materials have cooled off, but the dollar, has strengthened in the last 12 months. So net cost has not come down. It's only through value engineering and innovation that you're able to bring down costs. So I think some of us who are going to be able to do that more effectively may be able to bring down prices, but on a pure raw material basis, after you factor in the dollar, unlikely.
Right. So is it right to assume that, sub 5% kind of a price hike is what the industry can expect, at least in the near term?
Yeah, I think industry will look to not raise prices. I think that there may be some downward pressure in prices. So we have to wait and watch. It's a little unclear right now, but I don't expect a price increase anytime soon. I think we need to bring consumers back onto to buy, and price points are of course important, and we're all conscious about them.
All right, got it. So coming to the B2B segment, could you give us an update on how the rural electrification sector has been faring? Because that's the segment, and how much it contributes to your overall order flow.
So, segment one, we're very, very happy with Q1. I think you saw about 19-20% revenue growth, expansion in margins. Margins have reached now 7%, and we're hoping that for the full year, it'll improve further. So I think overall, we're seeing a good benefit from scale as well as from pricing. Now, you asked about rural electrification. Frankly, we do not do rural electrification. It's zero.
Sorry, railway electrification. My bad. I meant railway electrification.
Railway electrification. I'm sorry. So railway, we entered about I think it was only 12 months ago. We booked a couple of projects, only about 500 crores in volume. Yet to execute a lot of that order book that we have. So we have about a total order book of about 5,500 crores. This is only about 500, so still a small factor. I think a lot of movement in the order book has been in the factory segment, a lot of movement in data centers, and in other infra. I think we've been very successful in metros and a few other areas. But we're very optimistic about railway electrification. We're going to do everything step by step. Every new segment that we enter, we first book 2 or 3 jobs of a manageable size. We like to execute them, reconfirm our assumptions going into that segment. If we like the segment, that's when we scale it up. So I think we will patiently build electrification. We'll patiently build water MEP. We'll patiently even build the data center segment. And I think looking forward, we are particularly excited with all the noise around semiconductors. Semiconductor fabs are huge users of MEP, air conditioning, electrification, clean room. So it's a big opportunity that will unfold maybe in the next 3 or 4 years. It's still a little early, but we've started already doing some groundwork there. So as Make in India moves forward, as the electronics industry grows, the government is supporting it 150%. We're very excited to be part of that growth plan.
All right. So, like we have seen in the June quarter, do you also expect the B2B business to drive your growth in the upcoming quarters? And while B2C is still lagging a little bit?
So, B2C is Q1 and Q4. Q2, Q3, everyone, goes away. So definitely the next 2 quarters, we're expecting our B2B businesses to deliver the results. We're very happy with, frankly, the B2B businesses outperformed our expectations. Normally, when you have a washout of a summer, you see degrowth in revenue and in profitability. In this case, you've seen growth on both sides. So I think that there's good momentum in B2B. We'll see Q2, Q3 deliver some good numbers. Of course, the B2C business is going to come back very strong in Q4. And I think we'll have a good overall year.
Great. I would like to ask you about the fundraising plan that you also mentioned, right? So, 1,000 crore is what the plan looks like. So, could you tell us how are you looking to utilize the proceeds?
Sure. So, we, as you know, that we're on a fairly significant capex cycle build out. We built a few factories in the last 2 years. We have plans to expand in Sri City currently, and we've also acquired some additional land. So, over the next 5 years, we expect significant investment both in manufacturing as well as in R&D. We looked at our balance sheet and looking at the growth opportunities that we have in front of us. We felt that it's the right time to strengthen the balance sheet with some equity infusion. So that's where the approval to go out and raise up to 1,000 crores of equity is what we've taken from the board. Of course, we go to shareholders, get their approval, and then go to investors and try and get them to come on board. Like I said, almost all of it is going to go into building capex or into R&D. And we believe with that, we will be strengthening the company, the portfolio, as well as the balance sheet, which will allow us to grow at double digits, annually for the next several years.
All right. So, what would be the capex for FY24?
So capex for FY24 will be approximately, of course, it'll range, I'd say, is about 300 to 450 crores. Of capex in the current year, and we're just reviewing capex over the next 2-3 years.
All right. So, do you also expect some money coming from the PLI?
Yes, of course. So, our Sri City plant has been built under the PLI scheme. So, FY24 is the first year of production. We are meeting our numbers, and so PLI income will begin to come in from next year as we close the year. So we have a plan over the next 3-4 years to bring in a fair amount of that money, and we're very well on track, and things are going well.
All right. Okay, Mr. Advani, it was nice and pleasure talking to you as always.
Thank you so much.